reports of Malaysians involved in Iran bombing. Bank Rakyat support for MSMEs aligns with internationalization goal. Good evening and Salam Malaysia Madani. You're watching Malaysia Tonight. I'm SAHIH Samsudin. So far, there have been no reports of Malaysians involved in the bombings at the Kerana cemetery in the city of Kerana yesterday, which has claimed at least 95 lives and left several hundreds injured. The Foreign Ministry, through a statement released today, said the Embassy of Malaysia in Tehran is closely monitoring the development and is actively liaising with the local authorities. The statement added that all Malaysians in Iran, particularly in the city of Kerana, are urged to keep abreast of the latest developments, take due precautions and adhere to travel advisories from local authorities. The statement said Malaysia strongly condemns the bombings and firmly rejects any acts of violence and terrorism in all of its form and calls for the perpetrators of this attack to be swiftly brought to justice. Malaysia expresses its deepest condolences and sympathies to the victims and families who have lost their loved ones in this tragedy. As well, to the government and people of Iran, we also pray for the speedy recovery of those injured. Foreign Minister Datuk Seri Mohamad Hassan has verified that none of the Malaysians residing in Japan were affected by the earthquake in the Niigata prefecture and the aircraft mishap at the Haneda airport, which occurred this week.
Datuk Seri Mohamad said he is in close contact with the Japanese embassy in Kuala Lumpur and his counterpart in Japan to obtain the latest updates on the two incidents.
Tidak ada rakyat Malaysia yang terjejas dalam insiden di lapangan terbang Haneda, dan di kawasan gempa bumi itu ada rakyat Malaysia dan juga pelajar-pelajar kita yang tinggal di situ, tetapi tidak ada yang terjejas dan mereka semuanya selamat dan tidak ada apa-apa kemalangan yang menimpa rakyat kita di sana. Kita telah pun menawarkan apa jua bantuan dan bentuk sokongan yang mereka perlukan. Kami bersedia untuk membantu dan memberikan sokongan kepada mereka, insyaAllah.
He said this to reporters today after the handing over of Malaysian traditional costumes under the Cultural Diplomacy Initiative to strengthen national arts, culture and heritage activities, which was also attended by Tourism, Arts and Culture Minister Datuk Seri Tiong King Sing.
Para assemblymen will be mobilised to assist the people in registering for the Central Database Hub PADU system. Menteri Besar Datuk Seri Sarani Mohamad said this is to ensure all residents in the state, including those in the interiors, benefit from the implementation of the system launched by Prime Minister Datuk Seri Anwar Ibrahim on Tuesday.
Kaedah bagaimana nanti kerajaan negeri akan membantu untuk facilitate dan juga mempercepatkan proses. Saya dimaklumkan semalam jam. Sistem itu jam sebab semua orang nak masuk pada waktu yang sama. Jadi apa yang akan kita buat, kita akan maklumkan kemudian.
He was speaking to the newsmen at the Perak Government's Mesra Meet the Client Day 2024, Series 1 at the Indra Mulia Stadium in Ipoh today. There are 59 state constituencies in Perak. The PADU system, launched by Datuk Seri Anwar on Tuesday, serve as the country's secure and comprehensive data hub aimed at preventing eligible individuals from being left out in the distribution of aid and subsidies.
Coming up, Ringgit expected to become outperformers on a relative basis in 2024. Bank Rakyat aims to provide 50 million microfinancing to entrepreneurs and micro businesses in 2024. Deputy Minister of Entrepreneur, Development and Cooperative, Datuk R. Ramanan said Bank Rakyat's continued support for the micro, small and medium enterprises MSME sector aligns with the government's goal of internationalizing MSMEs.
Datuk Ramanan said this is a key agenda for the country's economic transformation through the Madani Economy Initiative, emphasizing societal factors, values and norms in the Malaysian Madani concept. Bumiputra Enterprises were disbursed with 43.5 million ringgit, 5.4 million ringgit to the Chinese community and 1.04 million ringgit for the Indian community. Bank Rakyat, with assets totaling 117 billion ringgit, is recognized as the country's top development bank.
Of course, in any industry, we strive to grow higher, but in this case, they will definitely take note of these points and try to improve on this point. Apa yang saya difahamkan tadi, memang every year their target is increasing. Setiap tahun meningkat, every year. So definitely, if we look at the graph, it is a graph which is going up, and it definitely will continue in that trend.
He said this when met by reporters in the nation's capital today. Meanwhile, Bank Rakyat Chief Executive Officer Datuk Dr. Muhammad Hanis Osman expressed the bank's commitment to strategically develop entrepreneurs and cooperatives.
The Malacca state government is offering various special incentives to investors from China in an effort to attract investment in various sectors, including the tourism industry, particularly involving arts and culture.
Malacca Chief Minister Datuk Sri Abdul Rauf Yusof said the initiative also aims to strengthen bilateral relations between Malaysia and China in conjunction with the 50th anniversary of diplomatic relations between the two countries this year.
So this anniversary for 50th anniversary for diplomatic tie Malaysia and China, Malacca will take part to celebrate the collaboration in terms of diplomatic tie and the history between Malacca and China been there for so long, for the last 600 years. So we are encouraged, there are a lot of China investors to reside in Malacca. Government of Malacca welcome them and we give them a lot of incentive. Then we make sure that all the investors coming from China, we get different incentive from other states. The only state can offer a lot of incentive.
The Chief Minister said the incentive offered was an attraction for several investment companies from China to invest in Malacca and expand their business, including Edra Power Holdings Sdn Bhd. He said that in conjunction with the celebration of the 50th anniversary of diplomatic relations between Malaysia and China, Malacca will also participate in the celebration through various programs and activities that have been designed.
LBS Bina Group Berhad has aimed to secure 1.8 billion ringgit in property sales for 2024 based on a positive outlook for the property market. The group concluded 2023 with 1.70 billion ringgit in property sales, missing its initial target of 2 billion ringgit.
This year, the property developer planned to launch 10 new projects encompassing 4,858 units with a total gross development value GDV of 2.33 billion ringgit in Klang Valley, Johor and Pahang. Executive Chairman Tan Sri Lim Hock San said the property market is expected to remain strong this year due to continued demand for affordable housing in Klang Valley and other parts of the country.
Why the houses can sell, you can see the recent acquisition of land from other developers. There are similar acquisition of land. It means that developers, other developers are so confident to. Otherwise, if the market is no good, no point for me to buy. In fact, LBS also acquired 1 or 2 pieces of land for future development.
Recounting 2023's performance, Tan Sri Lim said that given the less encouraging market sentiments and economic conditions, the group had to push back a few launches to 2024, which led to a slight dip in property sales. According to the group's statement, LBS is actively engaged in 19 ongoing development projects, collectively estimated to have a GDV of 5 billion ringgit. As of 31st December 2023, the group has unbilled sales totaling 1.99 billion ringgit, ensuring a clear and robust earnings outlook for the next 2 to 3 years.
The property sector stood out in 2023 as the second best performing sector on Bursa Malaysia, with the Kuala Lumpur Property Index KLPRP recording an impressive return of 34.5% versus the Kuala Lumpur Composite Index KLCI loss of 2.7%. In a note today, Hong Leong Investment Bank Berhad HLIB said that the property sector was an outperformer in 2023.
It said in 2023, with improving supply-side conditions, the time was ripe for a correction of the earlier sector mispricing. HLIB said the sector also saw a triple boost from stronger earnings from accelerated billings, higher sales as there were more new products in the primary market, and higher launches as supply conditions improve. Nonetheless, the investment bank said that these three factors did not reflect a fundamental change in underlying demand dynamics. HLIB also said it maintained the sector's neutral rating after downgrading from overweight in December 2023. Stocks such as Sunway Berhad Sunway, OSK Holdings Berhad OSK, and Matrix Concepts Holding Berhad achieved their all-time high stock price during 2023. Despite an overall neutral view on the sector, there were several identified names under their coverage that have the potential to outperform, with Sunway, OSK Sime Darby Property Berhad, and IOI Properties Group Berhad among the investment bank's top picks. Meanwhile, HLIB said it expects moderate growth in 2024 and much of the sector tailwinds enjoyed in 2023 to diminish.
On another note, HLIB said the crude palm oil CPO price will likely remain lackluster in the next few months, possibly until the second quarter of 2024 in the absence of catalysts.
The investment bank believes CPO's unattractive price discount against soybean oil, narrow palm oil and gas oil POGO spread, high stock levels among key vegetable importing countries, in particular China and India, will curb near-term demand for palm oil. In a research note, it said that demand sentiment for palm oil will improve once El Nino's lag impact on palm production is felt, and the bank also maintained their neutral stance on the sector given the absence of clear catalysts. For 2024, HLIB has maintained the CPO price forecast at 4,000 ringgit per tonne in 2024 and 3,800 per tonne in 2025, based on the assumption that El Nino's impact on palm production and prices would kick in around mid-2024. The investment bank said, depending on the intensity and timing of the occurrence, whether anomaly arising from El Nino would in turn result in lower fresh fruit bunch FFB yield through bunch failure, floral abortion and prolonged male flowering phase. It noted that during the recent two El Nino episodes, which happened in 2009 and 2010 and 2015 and 2016, its impact on CPO yield was felt 8 to 9 months after the occurrence. Hence, El Nino's impact on palm production will likely be felt by the end of the first half of 2024 or early second half of 2024, and this will in turn boost CPO price sentiment.
Maybank Investment Bank Berhad, Maybank IB, has maintained its neutral call on telecommunications over its challenging outlook for 2024 as the sector is plagued by uncertainty about the phased transition to dual 5G networks.
The research house said the possible startup in Digital National Berhad DNB lease payments could adversely impact telecommunication companies' telcos' earnings. In a research notum, Maybank IB said telcos are currently paying a nominal amount to use DNB's 5G services, and when the required conditions are fulfilled, the minimum annual fee would rise to 360 million ringgit for Maxis Berhad and 288 million ringgit per telco for the rest. Maybank also said assuming telcos maintain their current level of network investment, the higher proportion of operational expenditure would theoretically be earnings dilutive to telcos. The research house noted that the concerns over excess price reduction for fixed broadband have somewhat dissipated after Maxis finalised its commercial agreement with Telekom Malaysia Berhad (TM). It added that the telecommunications industry increasingly depicts a long-drawn race to the bottom as competition hampers monetization and regulatory demands intensify. Maybank IB also said that as revenue stagnates, they believe telcos can only rely on optimizing costs to preserve earnings.
Analysts said Bursa Malaysia continues its uptrend at the close today due to increased interest from retail and repositioning of portfolios by institutional and foreign investors. Today's turnover surged to 6.37 billion units worth 3.82 billion ringgit from 5.63 billion units worth 3.12 billion ringgit yesterday.
Today's turnover was the highest in over a year since 24th November 2022, when the market recorded 6.86 billion units turnover. The benchmark index opened 0.48 off a point higher at 1,462.85 and moved between 1,461.03 and 1,477.56 throughout the trading session. On the broader market, gainers beat losers 630 to 424, while 444 counters were unchanged, 722 untraded and 16 others suspended. Rakuten Trade Ikuti Research Vice President Tong Pak Leng said there was a strong buying in YTL Power International and YTL Corporation, driven by robust earnings from the Singapore power business and optimistic expectations in the data center sector, while interest in blue chips such as Tenaga Nasional and Maybank remain strong. Meanwhile, other key regional markets finished mostly lower following a negative Q from Wall Street overnight. The spotlight, Tong said, would now be on the forthcoming US jobs data on Friday, especially after the US Federal Reserve's FED December meeting minutes hinted that rates might persist at restrictive levels for an extended period.
The Malaysian rubber market ended mixed for the second consecutive day today, in tandem with the performance of the regional rubber futures market, as uncertainty over the timing of a United States US interest rate cut weighed on global sentiment.
A dealer said further losses were, however, capped by gains in crude oil prices, tight Thai natural rubber supply due to wet weather and a weaker ringgit versus the US dollar. She said oil prices rose today, adding to solid gains in the previous session on persisting concerns over supply following disruptions at a field in Libya and heightened tensions in the Middle East. It was reported that the Thai Meteorological Department warned of heavy rains in the south from January 4th to 9th, potentially affecting the supply of natural rubber. Meanwhile, the dealer said hopes for a March rate cut faded after the US Federal Open Market Committee minutes provided little clue about the timing. She, however, added that the US job openings falling 62,000 to a near 3-year low of 8.790 million in November could pave the way for the Federal Reserve to start cutting interest rates this year. Compared with the previous closing, the Malaysian Rubber Board MRB price for standard Malaysian rubber 20 SMR20 was down by 4.0 cent to 705.5 cent per kilogram, while latex and bark gained 1.0 cent to 550.0 cent per kilo. At 5 p.m, MRB reference price for the physical SMR20 stood at 702.0 cent per kilo, while latex and bark was at 552 cent per kilo.
The Malaysian ringgit and Indonesia's rupiah are expected to be outperformers in the region in 2024 on a relative basis, benefiting most from monetary policy divergence.
Standard Chartered or Stanchart said in terms of relative performance, the bank expects the Indonesian rupiah and Malaysian ringgit to outperform and the Philippine peso to underperform, while they are relatively neutral on the Singapore dollar, Thai baht and Vietnamese dong. Stanchart said it believes US policy rate differentials have bottomed out as the US Federal Reserve FED has moved clearly into a pause phase. Therefore, it reckons that Malaysia, Thailand and Vietnam's interest rate differentials will improve, while Indonesia's rate differential against the US will remain similar to current levels, while Philippines' rate differential versus the US dollar will worsen in 2024. Stanchart said stabilization in China's economy, meanwhile, is also a boost to ASEAN currencies, estimating that the second largest economy drives between 4.0 to 12% of the region's GDP. In addition, it expects the US dollar renminbi pair to ease to 7.0 by the end of 2024 as the China economy bottoms out, capital outflows abate and FED, People's Bank of China, monetary policies became less divergent. The bank sees the ringgit gaining in the event commodity prices rise in 2024 and from a recovery in electronics demand.
Oil prices rose today, adding to solid gains in the previous session on persisting concerns over West Asian supply following disruptions at a field in Libya and heightened tension around the Israel-Gaza war. Brent crude rose 38 cents or 0.5%, while US West Texas Intermediate or WTI crude futures rose 52 cents or 0.7%.
Both benchmark rose by around 3% to settle higher for the first time in 5 days yesterday, with WTI seeing the biggest daily percentage gain since mid-November. The market was also supported by data from the American Petroleum Institute showing US crude stocks fell by 7.4 million barrels in the week ended 29 December, which was double the drawdown that analysts polled by Reuters had expected. Meanwhile, the Organization of the Petroleum Exporting Countries OPEC said that cooperation and dialogue within the wider OPEC Plus producer alliance will continue after OPEC member Angola said it would leave the bloc last month. A meeting of the group has been announced for 1st February to review implementation of its latest oil output cut. Analysts at Goldman Sachs expect Brent to range between $70 and $90 a barrel in 2024 based on flexible OPEC Plus supply, a low risk of recession and opportunistic strategic petroleum reserve purchases by China and the US. Geopolitical risk scenarios will remain a key upside risk to the forecast, the analyst added in a 3rd January client note.
Overseas investors will enjoy greater access to the Chinese capital market and have the chance to tap into more economic opportunities as the country's securities regulator continues to extend its Qualified Foreign Institutional Investors QFII program.
Last year, China's Securities Regulatory Commission (CSRC) approved 81 new foreign institutional investors QFIIs and RMB QFIIs RQFIIs, expanding the pool of foreign companies allowed to trade on China's stock exchanges and marking the latest step in further opening up the financial industry. First launched in 2002, the QFII program enables licensed financial services firms and dealers to trade onshore bonds and stocks. Their clients can now access a wider range of futures and securities listed on mainland bourses than via the original Shanghai Hong Kong Stock Connect and Shenzhen Hong Kong Stock Connect, two landmark mutual market access programs launched between 2014 and 2016 to connect the Hong Kong and mainland equity capital markets. According to the CSRC, the number of qualified foreign institutional investors has risen to 802 since the first QFII application was approved back in 2003, with the list including some of the world's major sovereign wealth funds, commercial banks, investment banks and insurance companies. Tian Li Hui, Dean of the Institute of Finance and Development of Nankai University, noted that international investors are upbeat on the medium and long-term development prospects of renminbi denominated assets.
US stocks posted material losses after the FED minutes noted an unusually elevated degree of uncertainty about the policy path.
According to the minutes from the FED meeting released yesterday, several Federal Open Market Committee (FOMC) members said it might be necessary to keep the funds rate at an elevated level if inflation doesn't cooperate. And others noted the potential for additional hikes depending on how conditions evolve. Earlier today, Richmond FED President Thomas Barkin expressed caution about policy, noting the number of risks inherent in trying to guide the economy to a soft landing. Oil prices climbed today following two blasts that claimed the lives of 95 people in Iran. Markets are concerned that already tense situation in the Red Sea could actually affect global crude oil supplies if more West Asian oil producers were drawn into the geopolitical conflict. The West Texas Intermediate for February delivery went up to $0.32 or 3.3% to settle at $72.7 a barrel on the New York Mercantile Exchange. Brent crude for March delivery increased $2.36 or 3.11% to settle at $78.25 a barrel on the London ICE Futures Exchange. Gold futures on the COMEX division of the New York Mercantile Exchange fell today as the US dollar index strengthened. The most active gold contract for February delivery fell $30.60 or 1.48% to close at $2,042.80 per ounce.
Beijing condemns Myanmar border casualties. That and more coming up in our foreign segment. Bangladesh is gearing up for general elections on Sunday with Prime Minister Sheikh Hasina set to win a fourth straight term and fifth overall for her Awami League-led alliance. But the buzz is missing in the country, with results pretty much clear as mean the opposition Bangladesh Nationalist Party BNP is boycotting the poll.
Some residents in Dhaka said they would not bother to cast their votes but urged the next government to tackle soaring inflation. Rising living costs has sparked violent protests in recent months as Hasina's government struggles to pay for costly energy imports due to shrinking dollar reserves and a weakening Taka currency. Hasina has used the country's massive garment sector, the world's biggest exporter after China, for broader economic growth. But higher commodity prices after the Russia-Ukraine war forced her to seek a $4.7 billion IMF bailout in 2023. The BNP boycotted the 2014 election but participated in 2018, which party leaders have called a mistake because the voting was marred by allegations of widespread rigging as well as voter and candidate intimidation. Western governments, including the United States and the European Union, had called for investigation into a range of irregularities in the 2018 vote and urged Hasina's government to ensure free and fair elections this time.
Beijing today voiced strong dissatisfaction that fighting in neighbouring Myanmar had caused Chinese casualties and said it would take all necessary measures to protect its citizens, following reports an artillery shell had exploded across the border. Armed conflict has raged in Myanmar's northern Shan state since October, when an alliance of ethnic minority groups launched an offensive against the military junta.
Several Chinese media outlets reported that an artillery shell from Myanmar had fallen across the border in the town of Nansan in China's Yunnan province, where it exploded and caused injuries to multiple people. Asked about the reports at a regular press briefing on Thursday, Foreign Ministry spokesman Wang Wenbin said China will take all necessary measures to safeguard the security of its citizens' lives and property. He did not specify how many people had been killed or wounded in the incident. The ethnic alliance has seized several towns and border hubs vital for trade with China in what analysts say is the biggest military challenge to the junta since it seized power in 2021. Last month, Beijing said it had mediated talks between the Myanmar military and the allied ethnic armed groups and reached an agreement for a temporary ceasefire. However, clashes have continued in parts of Shan state, and China's embassy last week asked its citizens to evacuate an area along the shared border owing to the security risks.
And that concludes this edition of Malaysia Tonight. In our top story, no reports of Malaysians involved in Iran bombing. Till then, I'm SAHIH from the river to the sea. Palestine will be free. Thanks for watching.